We have fourth quarter earnings coming in from Marvell Technology. Let's have a look at what happened there. Fourth quarter results, the adjusted earnings per share coming in at 80 cents versus 60 cents year over year. The estimate had been at 79 cents, so a beat just a little bit for the company there. Net revenue, $2.22 billion. That's up 22% year over year. The estimate had been just shy of that at $2.21 billion. Data center revenue at $1.65 billion. That's a 21% increase year over year. And the estimate had been just under that at 1.64. The CEO says their revenue growth was driven by robust AI demand. Next quarter forecast sees net revenue coming in between $2.3 billion to $2.5, and the estimate had been at that lower end at 2.3. Investors liking it. Stock is up over 9% in after hours. Let's go to Angelo Zino, equity analyst and senior vice president at CFRA Research to look at these numbers. Okay, so they beat Angelo, but, not in any major way, just slightly from what was estimated. What's the key metric for you for this company?
Yes, thanks for having me. So, I think the key metric continues to be that data center revenue trajectory that the company has. I think, with Marvell, unlike some of the other compute-oriented names, and we typically look at four big ones, right? It's Nvidia, AMD on the GPU side of things primarily, and then you get the more custom silicon-oriented business. You had Broadcom report last night, and Marvell's kind of a smaller version of Broadcom in many respects. But when you kind of think about that data center business, it's been a little bit more choppier than some of the other compute-type names here in recent memory. A big reason for that is they are very highly tethered to Amazon at this point in time. So we kind of want to see and hear on the call, what that data center trajectory looks like as we progress through the year and even into 2027, what kind of visibility they have on that side of things. Our view clearly is the fact that, hey, listen, some of the recent choppiness that they've seen probably alleviates, and you're actually going to see growth start to accelerate as new offerings come into the market here over the next couple of quarters.
I'm always amazed at when the tech companies report and who actually benefits from that in the share price and who doesn't, because a lot of them, as you know, getting hammered. In this case, Marvell is not. Do you see any reason behind that?
I think there was a lot more cautiousness around Marvell going into the print relative to some other names, and I'd say that's been the case for quite some time at this point in time. Interestingly, you had Matt Murphy, their CEO, just last quarter, essentially come out and say, "Hey, listen, business is extremely strong. We see no signs of potential hiccups here along the way." In terms of an air pocket. And, based on these results and the guidance that they provided, at least it looks like in the near term here, any type of, concerns or, wariness on the stock here looks to maybe have been a little bit premature. So it looks like, at least at this point in time, some of the fears and some of the multiple compression we've seen here over the last couple of weeks and months, again, maybe provided an opportunity here for some investors.
Okay, let's talk about Nvidia for a moment. That stock been hammered today a little bit for a number of different reasons. But the CEO says Nvidia's $30 billion investment in OpenAI might be the last time. How do you interpret that? What is the reasoning around it?
Yeah, I mean, when we think about it, I mean, clearly it is a bit of a step back from what they came about just back in September or so last year, and they've almost been kind of stepping back here over the last couple of weeks. I'm not necessarily surprised by it. I'm not necessarily concerned about it, but I will say this: the initial $100 billion commitment that was made by OpenAI to Nvidia wasn't necessarily something I thought they were going to even fully complete. It looks like it's completely off the table at this point in time. That $30 billion, clearly I think is more along the lines of Nvidia trying to support OpenAI, which is going to be a big player as we try to build this AI infrastructure environment out. So $30 billion of that $110 billion that OpenAI just announced in terms of the offering. And as we kind of look ahead, again, Nvidia saying this might be the last because you are going to have that IPO. It's going to be a massive IPO. You're going to see some significant, additional funding here from OpenAI. And when you actually just look at some of the forecasts that OpenAI just put out a couple of weeks ago in terms of the revenue trajectory through the end of the decade, you're looking closer to 200 billion. The hope here clearly is over the next kind of 18 to 24 months, a lot of the the acceleration in terms of the revenue hopefully will be enough to at least largely self-fund the business.